Good morning. It's 8:16 on the 15th of April, 2024. If I get my mouse going right. We had a number here and also a Fed speaker at the same time, both at 7:30. This is going to be a unique, you'll notice that I'm on the MES over here rather than the usual ES. This is going to be an interesting period of time here and some streams, I think. On Friday, I wasn't very mindful of risk exposure. And what essentially happened was over the course of last week, I had some problematic trading and took a couple of, I think, 4 stops or something while I was just starting out with a newer, working on a newer funded account. And there's $1,000 drawdown on a $50,000 account. So right now, I've drawn down below the amount where I could trade the ES. In other words, one more stop and I would blow the account. So this will be an interesting situation to see if I can actually manage my trading business properly. And that is to rebuild back with micros, which are 1/10. In other words, a mini tick is $12.50 and a micro is $1.25. Obviously, it's a slow, painful process, but in order to grow the, it's risk management and taking care of the business, right? The goal of every trader ultimately is to be able to trade tomorrow. So that's the plan. And I'm going to go ahead with that. My thinking is, of course, I could risk it and gamble and take a mini trade. And if it, if it goes to target, great. If it goes to stop, then the account is blown up, and that would mean starting over. And the parameters around that are that you need to have you need to get on a combine or whatever they call them now. This is a TopStep thing. You would need $3,000, and then you're into a funded express funded account again. Well, if you're going to trade to $3,000, why would I not just continue on as I am? And I think this is much more beneficial for discipline, trade management, and interesting on this account. I think it's a good example to stream. So that's what I'm going to do. I will be doing basically all the same functions. For example, we will be opening higher out of range. All the same rules as usual will apply, and same, practices and whatever else, except hopefully I'll be more, I don't know what, one of the things that's kind of, it's a reality that everybody in that position of a funded account needs to think about. If you have $1,000 drawdown when you first start that account, that's 3 stops. You can take 3 stops in a succession, and you can no longer trade that account. You have to switch to a micro or whatever else it is, right, to lower your per tick cost so that you can get above the 3. Because in my risk neutral plan, which is right here, it's a 12 tick stop, 2 lots package. It's a 12 tick stop, 12 tick target on the first risk neutral, and then a 12 tick stop loss over here on the, you can't have both of these the same because of this tool. So one's 12, one's 13. But anyway, 12 tick stop, the first risk neutral profit target is 12. Now you're risk neutral, and the worst you can do is scratch. And then the next one is 48. Okay, so that means two contracts, 12 ticks, that's $300. So if your account is below $300 and you take a trade on an E-mini, you're gambling that you're not going to take a stop, and that or you're going to at least make your scale. I don't think that that's a viable trade plan for a business. It's basically, I think the way to do it, and the way all older traders and more successful pro traders I know are, when you're taking losses, the first thing you start doing is scaling down, size down, and in my case, you can't size down below 2 and have risk neutral system. So I have to go down to the next contract, which is a big size down, as I just got through saying. So that's what we'll do and see how that works out. Also, then you turn on the trading system. Everything's the same as with the other contract. This is both because I enter on the keyboard, manipulate the resting orders with the mouse. The part's all the same. I've over the weekend, all my cloud notes are pushed the same. All the high volume notes are pushed the same. The lines here, everything should look and feel exactly like the E-mini contract, except for the fact that there is less volume. So it's a thinner traded contract. For example, right now, the E-mini, here you go. Right now, the E-mini is traded, since 1700 last night, the E-mini is traded 359,000 contracts. The micro is traded 268. So I'm assuming that there will be more volatility, not like there is on the NQ, which is 143,000 contracts. Not so much volatility as there is in the NQ, but more so than the ES, which means that if it's a thinner market, it's going to skid past things. I will be really interested to see how well the trading, the 2-lot package that I usually use on the E-mini works for this micro. And now, what day is this now? The 15th of April. Ooh, tax day. Okay, so we have the pre-market has been, I wish I'd have just thrown one on last night. Of course, this is the same thing that you always say. Threw one on last night, and I'd be up from 62 to 90, so 30 handles. But we're now going to open. Something's wrong. Yeah. This isn't higher out of range. I'm not sure what's going on here. I want to make this. I had never had this E-mini contract, a micro contract in my book map or on IRT until over this weekend. So I'm not so sure that the historical stuff is being pulled properly, but let's take a look. This is the micro MC, which looks fine. So if you had to think about it here, we are not opening out of range. Here is the range of last Friday. So the RTH high could be about 52.18. So let's see if that's the case. But you see on Bookmap, that's not the case. It shows the ETH high, the previous RTH. Yeah, there it is. Previous RTH high right there. Okay, so we are not out of range. This is incorrect. So this is higher in range. Oh, there you go. In range. And that will be the statistics that I look at when I populate over here. And I'm assuming that I'm not going to change the statistics homework to the other contract because I use it for other stuff. So I'm going to continue to believe that this is the similar contract, that this is a similar statistic. So it's higher in range. The overnight POC then is 82.9. And so we go from 82.9 over here, and we go to 82.9. And that's all. Oops, didn't have that right thing on. Let me turn this on. Okay, so we're going to go to 82.9. And that's the that's the statistic. Then I will do that for each one of them. ETH high. Well, the mid is 77.5. That's always a biggie. After hours, I might play around with changing this homework study to the micro. But right now, I don't think it's important. I could be wrong. Previous RTH high. Previous high is 56.3. So this is going to be real interesting to see if I can fight my way out of this corner. I'm not sure that makes a lot of sense, but we'll see. I've thought about it quite a bit, and I believe so. Overnight high. Where do you go, buddy? We go. Overnight high is 74.9. Uh-huh. Uh-huh. Okay. I don't know. Previous low, maybe. Previous mid is 70.0. That happens to be right here. I don't know why that didn't work, but anyway, there you are. Boy, I can't hit these lines to save my butt here this morning. Overnight low. How low can you go? 33.2. Wow. 33.2. So if you're new to this, what this means is this study goes back 2003 days. Of these 2003 days, 574 of those days opened higher in range. That's 28.7%. Of the 574 days which opened higher in range, the overnight POC was touched by price 82.9% of the time. That's where these values come from, and that's how I put them across to my book map for reference. So, ooh, wow. There you go. And I'm busy talking and not doing what I'm supposed to be doing here. Where'd that go? Boom. I do a snap of the levels and provide that, well, to the Traders Lab every day. I try to do it about it. Oh, come on, man. What's going on here? Ice going crazy and everybody's going nuts all over everywhere. I do that snap every day at 8:20. I try to. And now let's see if I can get organized back to everywhere I need to be here. And I will change these to when we open. Well, we have just opened, so okay. Change these to regular trading session hours. And there we go. We're off and running like a herd of turtles here. So I mark the developing value area or POCs. Call it POC migration right there, migrating VPOC, whatever you want to call it. I do that so that when these scroll off to the left, I can see what the hell is going on without scrolling all over the place or looking over my IRT. And now let's see what happens here. Let's see how this trades. Well, there's no indicators on any of my charts. This is the full session V volume profile, which is from 1700 last night. This is the current RTH session. You see it reset at 8:30. And this is the chart volume profile. The brighter yellow here is the current RTH session volume VPOC. This more muted color is the full session. The whatever that color is a VWAP. That's the volume weighted average price. This is the mid. And I don't have the correlated market on this one of the NQ, which I'll have to do in a minute. You can see that over here. This blue, it'll look like this blue right here. That's the correlated market. NQ only movement, obviously, because the NQ is traded 18,200 or 18.4 or something like that. So what we have now is a choporama. I don't know if my volume settings balls. I've never traded this MES, so this is a new thing. It just seemed like the prudent approach to me. The only thing to reasonably do to not jeopardize the account, this funded account, express funded account with TopStep, which I find interesting to do, and great things to do for experiment. And obviously, why would you experiment with your own money? You know what I mean? That's pretty stupid. Once you're funded, you don't pay for your, well, you have to pay for the level 2 data for Bookmap, but you don't have to pay for the combine fees or any of that stuff. And after 5 profitable days, you can withdraw. It's just they pay out like money. So we'll see what's going on here now. Like I said, I've not ever traded this, so for me, it's a new thing. I've traded the NQ. I thought about that, but that snake is even worse. We may be in a situation of mean reversion here at the moment. So there's a low. The problem with that is, and I will explain something about my trade plan. The first scale for risk neutral is 3 points, 12 ticks. My trade plan says that I have to have a clear shot at that scale with no obstacles in the middle. Okay, so if I were going to go long down here, targeting this developing value area low, high liquidity, or the IB low, current IB low, or more importantly, the mean reversion is the mean, which is the VPOC. I'd have to have 3 points between my entry and the first obstacle before it's a qualified trade in my trade plan. And so there you go. And the frustrating thing about Friday's trade, which is I got to post that stream, both of my trades were just premature with later entries, and both of them went well past my second target, which is 48 ticks. It's really disappointing. So, but it was quite clearly I'm not doing something right. So, so there you are. All right. So I will be right back. right, so this is a pretty exciting adventure here this morning. I'm not sure how it's going to work out, but I think it's the correct approach from a business point of view. First, I guess I should also comment on my business, how I treat my trading business. I can't write and talk at the same time. My trading business is a probabilities and statistics. What I mean by that is that I capture the data for trades having the identically same parameters, context, all those things, stop level, everything, and you determine from that statistically if you have a positive edge. If you do so, then you take all instances of that trade and you allow the law of large numbers to manifest positively in your account. And if that sounds familiar, the most widely understood analogy for that is the casino gaming business. They figured out long ago that whatever the percentage of edge is in, say, 21, with the specific number of cards, the specific number of cards in the shoe, the specific payout rules, all of the parameters are identically and rigorously followed, that they have a positive edge of that percentage. And so their only mission is to deal as many hands at 21 as they can in a 24/7 period, 24/7, 365, right? And it's quite obvious who's winning, the casinos or the gamblers. It's the law of large numbers works, and it manifests that percentage of edge or probability percentage to their favor, to their account, and go have a drive through Las Vegas or somewhere and see who you think is making the money. And that's my theory about the way to do this. And I have a couple 3 setups that I'm collecting the data on and continue to do so. One of the things that I find hard, or I've recognized, when you actually capture live data, live trade data, unless you're trading like you're killing snakes, it takes forever to get a statistically significant data set, which in my opinion is a minimum of 50 samples. Okay, so it takes you a while. If you do, trade a week, a trade a day, would be a minimum of 50 days, and they have to be identical. You can't have context higher, context lower, open in range, open out range. Those things are all factor into it, and the stops have to be the same. The targets, the scale, all of those things have to be identical, or the trade does not fit in that particular data set. So I've been trying to brush up again on my, remember my RTL skills in IRT so that I can code up these various statistics with their respective parameters and run back tests so I can get the percentages, because I don't have 1,000 years to do this. So I want to, and this is, relatively new. Previous to this, when I was trading, I wasn't in such a statistically, wasn't aware of the risk neutral system, and I didn't do this statistically, run the business as a statistics or a probability business. And that's, I did okay. But it was truly seat of the pants, right? I had some setups that I guess intuitively I knew worked out more than others, but I don't think that that's a way to run a business. So I'm focused on trying to do this correctly. And the reason for the stream is that it is my virtual journal. I hear what I'm thinking by my narration, and I see, obviously, what I see. And it makes it real informative to go back and review the streams, see what, hear what I was thinking at the time of the trade and go, well, you bozo, why'd you do that? Or, yeah, good move. That's great. Good improvement. And it adds transparency and accountability. I take no trades off stream, period. So that's That's that. That's like, taking trades, not journaling you're losing trades. How smart is that? And a lot of people do that crap. So this is the one account that I stream, and it is, I've now switched, as I said earlier, from the EMA to the MES, from the ES to the MES, because I took essentially through the course of last week, I was near the starting point of the $1,000 drawdown. And so 3 stops, consecutive stops, and you're up at $900. So you're under the possibility of taking another trade and another stop without blowing up the account. The only thing that I know to do is to size down, which you can't do, and still maintain the risk neutral philosophy or trade plan, or switch instruments to a lesser instrument, which is what I've done. The MES is $1.25 per tick, or $5 a point, compared to the ES, which is $12.50 or $50 a point. So that's it. So then you just have to trade this contract until back up into the safe range, and then switch back to the regular instrument. That's what I know to do. I've thought about the NQ perhaps because of its greater volatility, but I think in the beginning, the technique, I've never traded this contract before, so I'm not familiar with it really like I am the NQ, the full NQ, or the ES, the mini ES or mini NQ. So I'm going to stick with this one because it's got more volatility. It has more liquidity. Not as much as the ES, of course, but it has more liquidity. So I assume that its performance will be similar. And that's that. Enough of that. Okay, let's see where we're going now. Well, that was a nice mean reversion trade that set up essentially right there. No heat, mean, and all the way to the other side. That's pretty classic mean reversion. And now if they're going to touch up here and come back down again, that's a rotational trade, and that's the majority of the days. This trade really had no trigger for me other than, I guess you could have called this the trigger. No real stop divergence or exhaustion, but definitely worked out. And let's see, there would have been 02 to 07, ample range for that trade. As I talked about the unobstructed path to the first scale. So there, yes, that would have been, I guess I should have shut up and been watching the trade rather than talking. Maybe that's the idea. And that could be, I've thought about that too. That could be a problem with my focus. Is obviously I don't usually stand and talk out loud. I do talk to myself, but but not continually, and about this. So we'll have to see. We'll have to see what's up. And I don't know any other way to do it. The whole thing about the narration is to be able to review the stream and understand what I was thinking at the time. That's, otherwise it's, play some music and then just trade is stupid. I don't like those kind of streams, and I can't see how it could be useful. Because the psychological factor is the huge part of this, obviously. I'm still trying to figure out why I didn't realize in time that I should have just taken that one stop and quit, realizing that the second stop would have put me in jeopardy, put the account in jeopardy. That's a real classic boner. That's one of the problems with now that I'm over here in ISA or Central Time Zone area. A lot of things going on at the same time now in my world. And so when I traded from Kuala Lumpur, it was just ideal because the market, the RTH opened at 2130. And it was, everybody was in bed and quiet. Nothing in the rest of the world was open and running. And boy, it was perfect for me to trade. But we moved here for several, good, valid reasons. But I got to figure out the trading story here. Now, this would be a bad place to try to trade. This is the middle out, which is, diddling in the middle and all those kind of things. So we've had 2 rotations. Total trade so far, total range so far is 02 is 10 points, 11 points. So if you took them all, you'd be up 20 points. The mean reversion seems to be settling in here pretty well. It's kind of well, I guess overnight pretty much took out those shorts from Friday. I guess. We'll see. None of this stuff is, should be mysterious to you. The VPOC, volume point of control, is just the price at which the most volume has been traded so far in the session, period. The IB high and the IB low are nothing more than the high and low of the first 1 hour of trade, period. It's called the IB because that stands for initial balance. That was some terminology from the market profile days. That's it. The mid is pretty obviously the middle. And VWAP is volume weighted average price, which is a calculated. So I guess technically that's an indicator. Pretty widely viewed one. And as far as these lines at the bottom, I don't know what the hell it's all about. I don't think we need icebergs or stops. CVD actually. And that's delta. That's delta on the chart volume profile here. This, which is this one here. This just profiles what data you see in the chart. That's it. I don't think I need that either. I never even looked down there. What I do pay attention to is break even and position. So, that's what I look at down there. So we did another rotation pretty much to the outside edge and back across. So far, we're just mean reverting pretty cleanly. Trade up, trade down, trade up, trade down, trade up. Looks like the rotations are getting a little closer together, but, and they're fairly clean without heat. The big thing to remember, of course, is that RMT or rear view mirror trading is so freaking easy and clear. Okay. And one of the hardest parts of mean reversion is where's the outside edge? Okay. It's come thundering down here. Now, do you go long or is it going to continue on? It does pull back and then you get this trigger. So this constitutes a trigger pretty much. It's test down and there was divergence. That would have been a reasonably clear trade to take. Not so much up here, a bit, but, not so much. Down here again, we've got 282 out and it comes back down to 11. But you don't know that this is where it's going to stop, right? It didn't stop here, it didn't stop here, it didn't stop there. It's so easy to look in that rearview mirror and act and sound like a real genius. Now you've got a real, in my opinion, no trade situation. You've got the mid, the VWAP, and the VPOC stacked on top of each other. The only possibility of any of that crap, because it is the mean reversion outside in. Some things that you need to pay attention to, or that a trader needs to pay attention to, is where does retail put their stops? Well, there are the three major lines right there. And of course, there are some stops outside these lows and above these highs, right? So, and the ETH high, which seems to have been pushed up, but I'm pretty sure that was 74 point whatever, is still open. The RTH come on. The RTH, damn it. Get away from there, you son of a gun. The ETH low down here somewhere, way down here, right there. So, I don't see the ETH VWAP has got to, or VPOC has got to be under these boys down here somewhere. Yeah, so this is a new contract, a new idea, and the mean reversion seems to have worked out quite well. ETH high would be, I would suspect, as a target that will be visited today, right here. There we have the full session VPOC migration up. There. Soon to be followed by this one, in my opinion, I suppose. They don't always align, obviously. I would be hard-pressed to take a VPOC migration up here unless it was dramatic, because the VWAP and the mid and the VPOC have been down here for quite a while, so there's going to be a bunch of fuel down here. If it migrates up close like this one did, and here you see the price check at aisle 3, there it goes, price check at aisle 3. This went up here, and they came right back down to test where it had just left. They might want to pick these stops and go that way with it. I'm not saying that's what's going to happen or predicting. You can't predict in trading. You can only anticipate. And one thing I forgot to mention about the trading business as one of statistics is if that's the case, if in fact you run your business that way and you have statistically significant identified edges on a particular setup, you can anticipate that setup. For example, when if your identified setup is a VPOC migration, you can anticipate when the VPOC is going to migrate, because it's the highest. It's the price at which the highest volume traded. So right now it's trading here, and you can anticipate that it's going to jump up wherever, to the next highest number as soon as it trades up there. Same thing with IB low or whatever. It's not like it's not a gambling game or like a killing snakes or something. Just shoot. It's a anticipate, wait, stock. That's the idea. I think I understand these things. I know I do. And now to apply them, and this is an interesting situation to be in with the limited. These combines are, I think, a real good way. First, you can make money. You don't risk your own money, and second of all, you're limited by capital constraints. For example, if this was your personal account and you were down here, you just could throw a few more dollars, some more money in there and eliminate that drawdown, right? You wouldn't have that trailing drawdown. You can't do that. Wow, a sneeze-a-thon. You can't do that in this environment. And this is TopStep, so this is a real company, the first of the funding companies. There's none of this crap about trailing drawdown is calculated on an unrealistic intraday profit. That's the craziest thing I ever heard of. And what's the only thing that's more shocking to me is the number of people that fall for that outfit. To me, the minute I saw that, I thought, you got to be kidding me. It's just obvious what their business model is. But a lot of people like them. I mean, a lot of people trade with them. I don't know they like them, but a lot of people trade with them. And the thing that shocked me even further is that TopStep doesn't have any crazy payout rules. They only have one. TopStep used to be real constraining because they had you had to have two targets and all that kind of stuff. You had to do in the combine in order to get funded. You had to do you had to do it twice. For example, if the profit target on a $50,000 account is $3,000, so you had to do the first step, $3,000. Then you go to the second one and you do it again. Well, then there were some other rules. Now there is only one rule. Now there's only one step. You go to you don't hit your drawdown, and you go to there's a scaling rule which says you can't trade 5 contracts out of the gate. Once you get to 1,500, I think it goes from 2 to 3, and then from 2,000 goes up to 5 or something like that. I trade 2, so I never pay attention. And you get to $3,000 one time, and you're in the express funded account, which means you can get a pay. It's still SIM, just like everybody else is doing now, but they pay you, which is phenomenal to me, and I haven't figured it out, but I will one day. I mean, to me, it makes no sense, but good. They do pay, so there you are. And that's how it works. Very definitely, you are within a regimented set of rules, so you can't just fudge it. Like, if I were in this position now, I would have thrown a couple $1,000 in there, another 1,000 or whatever else it is, to lower that drawdown and be trading the E-mini, because realistically, it's not inconceivable at all that you take 3 stops in a row, 2 stops in a row. It's, I see many people on the T-Lab who, blah, blah, blah. They make lots of comments about that through the course of the day. Well, if you do that, then you're in the same position I'm in now, which is down to an account balance on the drawdown where one stop on the E-mini would blow the account. There's not 100. Well, in my case, it's $300 because there's 2 lots. Even if you scale to 1, that's $150. It would be, I could trade one lot on the E-mini, but that doesn't really. I think this is the right approach. I think the right approach is to be conservative and drop down to the lesser price contract, and kind of let that be also a lesson that you got to trade this small thing until you build your because you didn't pay attention to your risk plan and risk mitigation and traded yourself down to a lower account size, lower value. Then you've got to the penalty for that is trading the smaller price account and meaning more positive trades to get back up to the other account, the other instrument. I don't know whether that makes sense or not, but anyway, that's what I'm thinking. So here we go. And now what? This is 9 o'clock in the morning. So the IB30 is in play. There is I've explained the IB already. It's just the high and low of the first 1 hour. There's a statistic, which is very commonly known, that 95 or 8 or 9% of the time, either the IB high or low are taken out by the regular trading session price sometime in that day, in that session. Could be the first second after, 9:30 and a second, or it could be 15, 59, and 59 seconds. You know what I mean? It could be 1 second before the close, 1 second after the IB is set, which is at 9:30. There's a stat that a fellow in the T-Lab came up with that says not equally as high, but close, in the high 80% of the time. The IB high or the IB low, which aren't set until 9:30, but they're here. In other words, the low of the first 30 minutes or the high of the first 30 minutes are extended in the second 30 minutes. Based on that theory now, you would expect that it's going to go down and push the IB low further south because we're down here bouncing off the developing value area high. Low, sorry. So we'll see. Now, this is not certainly a trade to take because that's a breakout trade going lower. And for me, that wouldn't be the right thing to do. There wasn't an entry here because of the 3-point rule to the scale. This is only 2 points. So, yeah. And so we'll see. In what it says then, the IB30 simply says then that the IB, the current, the high or low of the first 30 minutes is extended, whichever direction, in the second 30 minutes. That's it. And then the old-fashioned statistic is called is now referred to as the IB60. And so you see, I'm hemmed in by the developing value area high and low because there's not 3 points from either direction to the VWAP to the mid. In other words, mean reversion. You don't have 3 points to the target. You do have 3 points. No, you don't. It's only 2, and it's only 2 points from the developing area low to the IB low. So you don't have that one either. I guess I sit here and don't trade, don't do anything, except adhere to my trade plan. The the developing value area low or high are just that. It is the value area as it's developing in the current trading session. The value area high or low, which I don't see on here right now. There you go. Value area high is the value area high and low from the previous RTH session, not ETH. What the hell? Fourth time today? What? I don't see what that means. And here we're probably going to get our stat. And remember that the IB low and IB high have essentially been the location for the mean reversion trade, which is clear, except now we've got the developing value area low down here, and that's not 3 points. There you are. And there's the IB30. Okay. And it's going to continue to hammer. Now, remember that we've got these statistics down here to the south, so it would have been a lovely trade to be on at the moment. We've got statistics southbound down here of the mid and the overnight VPOC, et cetera. Well, they're selling the hell out of it. I don't know what to think about that. I'm sure sorry I'm not on it. Very, 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 very prone period to FOMO. Yeah, that's disappointing. And you see how the IB, the IB low, this line updates quicker. They're both cloud notes, but it updates faster than the cloud note. Bookmap updates this line because it's a internal thing faster than the regular cloud notes, both of which are pushed by IRT. And you'll notice that it's right now under the Globex VWAP. Yeah. And that liquidity coming down on top is keeping the lid on the pot. Look how that's being bracketed here by algos. What the hell is going on there? I'm standing here pissed that I'm not involved in this trade, but now what do you do, right? It's just you got to wait for a pullback. They've decided to go directional, obviously. Well, seems like obviously. There's rotational, and then boom, sells off. They finally puked it out, and down they are to the previous value area high. And away they go. There's the mid, and the VPOC could well be the next target down there. I mean, undoubtedly will be. But getting on a trade like this, in my opinion, here is FOMO, because that's just you're trading a breakout. The RMT opportunity to get on the short was here. Again, RMT, right? And maybe this is a similar case, but you don't know that. Or I don't know that. They're now coming down to a high volume node on the micro composite, which is an extremely low volume node in the yesterday's RTH. Look at it go. And here I sit, talking about it up here. 20 something handle. I mean, I don't know. I'm about ready to just throw one on and a Hail Mary, but that's no way to trade. That's certainly not any kind of I guess what I should or could do, probably, assuming that I ever get this RTL and the back testing figured out, is see if there is in fact actually a probability or positive edge in breakouts. I mean, that's a viable trading plan that has been proven very successful by various people. Richard Dennis and the Turtles, their entire trade plan was breakout trading, momentum breakout trading. You know, that's now here. Had you gone long a short here, you'd be stopped out. And what made it do that? All I can see is that they came driving right into the previous VWAP and this extremely low volume node of last Friday, and that turned them around on a dime. You know, it's what I guess I pointed that out, low volume coming up to a low volume node. So yeah. The naked VPOC is down there at 59 from last Friday's volume profile. Now we're going to test up here to the mid and the previous value area high. A lot of liquidity in the way there. I don't know how excited they are to go ripping into that low volume area. Doesn't look like it. House. What the hell does house mean? People post things that I always figure that they got the wrong chat room or something. I don't go to any of them. The only place I ever the only chat room that I ever participate in is the T Lab. It's the Bookmap. Whoops, 59. It's the Bookmap Discord Traders Lab. It's run by a guy named Tom B, who, in my opinion, is the real deal. He's been trading 44 years now, and on his own account, very profitable, obviously, and most importantly, has nothing to sell. And that certainly can't be said for other presenters, even on that Bookmap outfit. You don't have to be a Bookmap subscriber. You do have to subscribe to their Discord channel, which is pretty obvious. Discord server, which is pretty obvious, but you don't have to be a Bookmap subscriber or do any of that stuff, and it's all free. And it's a good crew of folks. There's I think some pretty good people in there, some vocal people in there, and there's some other ones who are competent that aren't as vocal, but I guess that's a chat room. I'm not a big, I don't do a lot of that social media stuff at all. I have other things to do that keep me busy. And I hardly recommend that T Lab. It's a Bookmap Discord Traders Lab. Tom B. There's a link to get into that Discord on the stream here in the description of the stream. And then go to the T Lab and you'll find it. So you see how lovely of an idea it was not to short in here, looking for lower. With all this liquidity living down here. And one of the nice things about Bookmap is you see where this high liquidity came in and where it pulled out. Now, if you're just trading off a dome, even TopStep, which has stacking and pulling, which I have had for 15 years or something, 10 years anyway, it doesn't do that. And that's one of the things I do like about Bookmap is the heat map shows you where the liquidity actually is and where there's, where when it came in and how long it's out there. And that's pretty cool, I think. Now we are well below the VPOC, just below mid, meaning then that the VWAP is above us and the POC is higher up than that. If we can get out there and see those, but there you go. There's the VWAP and there's VPOC. There are some structured trades, which is mid VPOC, VWAP, VPOC, in the right context. And there's always fuel below them. In this case, there would be fuel above it because we've traded down below the mid. So there's a bunch of stops up here. That's typical retail behavior. Pretty typical anyway. I have a hard time getting, there we go. I like to have this spread out to 50 cents or, half a tick, two ticks, half a point. Kind of gives me I find with those grid lines and that spacing, it gives me a little more perspective on what's going on. One of the things with Bookmap, hey, Lucky. Hey, buddy. What are you doing? Our big cat's here. He must be hungry. Only time he's affectionate to me is a meal ticket. Yeah. He's a mama's boy, and she's in school, so. Yeah. Okay. I don't know. Okay. Yeah. What are we going to do here? Sell down? I don't know. Now we're kind of chugging up. I think I'm late to this party here. Hold on. Stand by. I got to see what's going on. We got a cat problem. I guess she's just missing mom. I'm thinking this is going to break out of here and head down towards that IB low. Let's see what happens. Oh, that didn't work like I had it planned. So something's not working here. Oh, get this shit. I had those both turned on. I could have sworn. Okay, so that didn't work. I enter with the keyboard and change them around with the mouse, and there you go. So we're bouncing around down here. We got the IB low below us, which is that real low volume area right here. And I'm glad I wasn't able to trade. Jesus, I got to get over that concept of the breakout thing. That's just, I guess that's nothing but FOMO. And we traded up to the next low volume part today here. This area right here. The mean reverted or off around here. And what we're going to do from this point is anybody's guess. Oh, well. Sure. There's a lot of people that have a very firm conviction what we're going to do here. Tell you, I don't know what's going on here. Doesn't seem to work. I don't know what's going on. Oh, here. If they come up below this mid and don't have any joy getting back through there again, which is also the developing. That doesn't make any sense. Developing value area low, I was going to say, which is, I'm wrong. It's up here. I don't even know if my execution system's going to work right. It doesn't seem to be. Playing nice here. There we go. Okay, it does work. Okay, it does work. Now we'll see if I get popped out here or we get to our first target, which would be risk neutral. Again, a late entry, bringing the stops below this level rather than up here at exhaustion and getting down there. So this is the same problem that I was having last week. I think it's just a matter of focus and concentration, I guess. I don't really know. 27 minutes to the IB30. 3 minutes, 9:27. IB30 is at 9. IB stat sets at 9:30. Put these together. And that's a poor place to have the stops based on the late entry because there's the swing high. So in theory, that stop should be above the swing high. We'll see if we get to our target or not, our risk neutral target. These always puzzle me when I'm. And another problem. Well, sorry, buddy. And another problem is when you do that, you see how the stop is just below the low. There we go. So we're risk neutral. We can bring this stop here. Now it's a scratch at the worst. Okay. So not to worry. Oh, buddy. Oh, buddy. Boy. Oh, buddy. Boy. Oh, buddy. Boy. And I don't really, one thing I'm not sure about with this contract, I don't know what the hell the commission story is. I don't know about the commission story. If they charge the same commissions as they do on the full contract on the mini, then that can't be the case because you would never be able to even break even. What, are you biting dead? Are you biting dead? Ouch. Son of a bitch plays rough. Plays rough. Uh-huh. What are they going to do now? Okay. There's our target. There's our stop. 1434. For a scratch. Okay. Well, thank you very much. Now, that would have been a pretty disappointing trade. However, had I been on the mini, the minute I scaled, I would have brought my stop to scale and locked in the $150, right? And worked my way out of the hole a lot quicker. But, you know, if this would have gone up here 2 ticks, then it's game over. And that's not the plan. All right, I'm going to put you on hold here. Go see what we can get done. Okay, what are these bird brains up to now? I'm going to be really pissed at myself if I'm late once again here. So we're looking for our risk neutral scale. And once again, I'm just under the swing, which is irritating. Look at that. Right at this old liquidity here. That's just so frustrating when it does that. And I guess it's just my, oh, look at that. Funny, huh? At the exact same entry. Wow, figured that one out. I guess that's stupid twice. I don't know. There's my scale. Okay, I'm going to scratch again, or we're going to get down to the damn IB low, finally. I don't know. Pretty soon this thing is going to fall out of bed, I'm thinking. I don't have the correlated on here yet, but yeah. Now we're going to get down there, perhaps. Let's get some movement here. Get some south on this thing. Put some south in your mouth, baby. We're in the IB30 stat range because the IB sets at 930, right there. So this will no longer move down, and when price tags that, it will be that'll be the IB low, the IB stat set, and they're going to keep jacking around and looking for mean reversion. These buyers are just monkeying with it again. On this contract, the volume continues to spread. Look at this crap. Seems like it has a lot of more volatility because of the light volume, I guess. That's just amazing they don't take it down. Well, it's the funny thing about these trades is I'm feeling the same emotional charges I feel trading the minis. It's $1.50. But I feel this. I do the same thing if I'm trading the sim. So I think that's a good thing. I certainly don't want that to go away. I think it's a good thing to control my emotions like that, to have those emotions. Let's see if they're going to get down here now. I'm tempted to pull my stop to entry, which, there we go. Now we're going to get that IB stat. Once that happens, I'm going here, and we'll see where we go from here. Now there's our second target, which I'm going to pull above that liquidity. And I'm going to bring this down to the IB. if we can get down there and get some of that out. Oh, there we go. Going on here. Okay, there's that. So I better do this too. There's this. Okay. Forgot to take that snap earlier. All of these snaps and things are in my drawer. Oh, look at here. Took me out to my tick and down to my second target. Damn it. You'd think I've just got to stop being that way. Word says, moving, trailing is fear. Yeah, I guess so. I could have left this here, not taken any heat. And that took me to the tick. Isn't that something? And here's my 48 tick target. Buddy. Which looks like it'll be hit. So that's very frustrating. I mean, I'm not unhappy with the trade, but on the other hand, this target is a lot nicer than this target. It's 9, another 6 points. So yeah. And that's probably something that's been the reason I moved this second target was I realized that I was getting nowhere fast, 1 step ahead and 2 steps back. You know what I mean? So if you don't have at least a 2-to-1, minimum 2-to-1 target, and you hit them frequently, you don't progress. The account doesn't progress exponentially so that you have, you're able to absorb those stops more. For example, had I had 2 or 3 of these full target trades in the account before last week, then I would be a long way from the drawdown, right? I wouldn't be in the situation where the account's at jeopardy here. I think I missed this completely. Yeah, I did. Bummer. 25. Well, never got to my target yet. So, well, what's going on here now? Let's look at the bigger scale, bigger picture. So there we are. The IB stat was put in, and now we'll see what happens. So those 2 trades, well, there you are. So the 2 trades, just here's an example. Let's get back over here if I can. I'll show you the difference between minis and micros. Okay, the profit on those 2 trades is $47.50. That would be $475 on the minis. So you see that getting this back up to a manageable level is going to take some trading, which is probably what I need. And so I'm happy about that. I mean, I'm not happy to be in the situation. I'm disappointed with myself for not recognizing it yesterday or the other day, last week. But I did recognize it, and I made a positive move about it. And now we're going to get down there and take my second target. Yeah, trading, the magic of trading. One wonderful thing about trading, and the reason I think trading is the most phenomenal opportunity that's come in my life, and I've had some really good ones. I've had a very charmed, lucky life, but I'm not complaining that at all. But my point is that it's a continual stream of opportunities, and you don't depend on anybody but you. Obviously, I have to have the software. I have to have the data connection. Yeah. But I don't have a boss. I don't have a this. I don't have a that, right? And that suits my nature because, well, that's another story. But that's the truth. Now a bio break is in order. And here we come down to T2. Or, see, the problem with T2 at this point is it's just below the low of the day. The IB stat is out. We have a naked volume point of control down here at 5169-ish. And they could continue this mean reversion crap. And right now, it's absolutely not the time to short, which is the breakout idea that I've fallen into that trap before. We have settle and close down here some freaking place. There's the overnight low. Somewhere way down here in the corn patches, I thought. Hold on a minute here. I gotta think of this, figure this out here. So the overnight POC is 83.1. So where the hell is 83.1? That's up above us, right? Because mid was lower. That's right. So we've taken that out. Have we? Oh, yeah. No. What the hell happened to what happened to the overnight POC? I should have 83.1 in here somewhere, and I'm not seeing it. I see the low, yeah, got that. I see the mid, got that. Above mid was 83.1.0. Huh. I don't mean the mid, I mean the VPOC. Now, we could suss that out by looking at the numbers here. It's got to be right up here. I'm thinking that I got screwed up and got 82.9, and it's really, what would be, there's no 82.9. So what I got was my number wrong. It's 83.0. So this is the $3.0. Okay. So that stat has been taken out. The mid's been taken out. What we've got left is the RTH low, ETH low. We've taken out the IB stat. Are we going to have an IBF now, which is what is referred to affectionately as an IB failure? And that is only really viable in a, shut that background music off. That's only really viable in a rotational day. The problem we have with that is we had a pretty big sell off here, and now we're rotating down. Lower highs, lower lows. So we'll see what happens. Basically, I don't know what's going to happen, and I couldn't possibly ever know what's going to happen. I can only anticipate. You're definitely not in the prediction business. You're looking at the anticipation, and that's why, to me, the business of probabilities makes so much sense. For structured trades, if I had a structured trade that says in a higher in range opening with context lower, rotational basically context lower, which is what we have right here. There's yesterday, or there's Friday. There's open is higher in range. We have rotational context lower. Context is from the higher to the lower. Okay, we had all those things. Do I have a statistical edge that says the IB failure, which means the test here of the IB, it doesn't continue past the IB. The IB fails and it reverts back in. The IB failure is essentially a mean reversion trade, and it's only a viable trade to take in a rotational environment. And I can't really put my finger on, this is not really a rotational environment. This is a trending environment that's having a succession of pullbacks, all of which would have been good entries. So recognizing that at the time and capitalizing on it. Now, do we test up below the IB here? have exhaustion and continue the sell-off, that's the one I don't know. And I don't know any of them, but that looks like that's it. Looks like that's going to be it. Yeah. And we've got settle and previous close down below us. This is breakout country, so I'm not going there. The reason that I find breakouts, first of all, I think they're FOMO for me. It's what's going on? What's going on? Our FOMO trades. And second of all, look where the hell the placement's going to be. For this trade short here, for this trade to fail, you got to be above the IB low. 6 points. You know? That's no worky. That's outside the parameters of my trade plan. And here we are at the previous, that's not right. Oh, that's the RTH low, yeah. Well, we're not really there. It's actually lower than that. To be honest about it, it's actually down here. Yeah, I got to see if this other thing's going to pop at 10 here. Let's go on the B ride back in case. Okay, so that worked out pretty just magical. Quick and easy, and away from that one. Okay. Solve the problem, and here we go. So what's happened in the trading world? Oh, we got down to the settlement and the close. So there we are. I'm sorry that I missed that episode. But really passed my target. Yeah, passed both of them. There's the first one, the second one. They were both. Ironically, that's pretty bizarre that I picked the exact same entry on both trades. Instead of up here, I picked the exact same entry. Wonder what the odds of that are. I guess stupid. Sorry, is a hard habit to break. I don't know. But had I not shuffled this one up, and now they traded down past my targets. So far, so good. And there you are. Staying up there. When is that stupid meeting? I think I have one more other meeting today somewhere. Check out what that's all about. All right. So here we are, bouncing off settlement and the previous RTH close, or the RTH close, I'm sorry, RTH low, previous settlement. We're now down to something. What is this over here? The RTH close, previous RTH close, which is right there, right there, right there. Uh-huh. So far, so good. So 2 trades the right way. You know, had I done that with regular minis, be right back up out of the hole and, everything fine. But there's no question in my mind that I am doing the right thing here. I will trade the micros until I am securely back above a 2-stop, jeopardy limit. I don't know what to call it exactly, but yeah, that was definitely oversight on my part. Poor risk management. Let's put it that way. So, I don't even know what's going on. I know what time it is. Okay, it's 10:30. So we've got our IB stat out. Looks like we had an IB continuation, and they may come back up and take it again. You remember previously I was commenting on lower highs and lower lows. And we've made the IB. We might trade back up here and test, and then could be again. The history, though, is not so good. History is one of similar. Come on. Similar. This was Friday. Here's the IB low way up here. Yeah. Oh, come on, thing. You know what's this? Having such a problem for them. Anyway. All right. And we're trading up to the IB low again. May test that and sell down. Right now, the market is context is lower, so I'm not going to be looking for longs. That's also part of my trade plan. I trade in the direction of context, and that's, I think, important. So now we need to see if we've gone down, hit settlement, and now we traded back up to test the IB low and the developing value area low. We'll see if they get rejected back out of value again. You see that we've been trading down, tested back up here. This could be IB continuation again. That's the that's what we have to see. Let me see if I get myself organized here. I got to get that correlated market on here. That actually means it makes quite a bit of difference. I didn't realize it. Seeing where the NQ was doing simultaneously. Now, if they come back up and exhaust right up here, that would be a trigger. This could just be picking off stops below here and then taking it higher. I don't know. In the meantime, I'm going to see if I can configure this. I probably have to have the instrument on the chart or in the system before I can use the correlated market. That would be my guess. So I guess that would be something interesting to show you, to show myself or show the stream or whatever else in a minute. They can't quite get up there. The buyers are trying desperately. 364 contracts out. Haven't tested back down yet, I don't guess. And on the other side of the coin, what do we got? What do we have? What have we got? All right, we'll look at the correlated market indicator here. So there's 32 out and there's 4. That would normally be considered stop divergence. But I don't know here. It's kind of dicey and I don't have that. I want to get that on here. I'm thinking that I'm going to have to do this. MNQ right here. MNQ, save the little, subscribe. Now the NMQ is in the system. And I should be able to set up the correlated market, but I got to wait for it to do all this cloud, pull in the data from the historical stuff. And so here was that stop run under these levels. 364 out. Thanks for playing. 16 out. 2. That's pretty much divergence, right? The problem is, and this is at 76 and this is 78. So it's only 2 points to the first obstacle. That doesn't work in my trade plan. So good for me. Okay, now let's see if we can find that correlated beauty here. correlation tracker. I think this is it. Okay. I don't see anything. I guess it's loading it over here. Doing the math. Now we're going to test up here, and we've got 85 out and 8 and 2 and 8 and 2. And there we go. There's that correlation we're looking for. And this is just too much right around that level for me, which is essentially this microstructure right here. It's not really that's really the middle there, but you know. Well, I'm not sure that this is a good idea for a short. Not sure. I would think. I'm on a scratch and a scale and not quite the second T2. I think I better think about this here for a minute. And so I'm glad I waited. This looks like a chop fest here. I guess I probably need to revisit the volume dots on this thing because they're probably too much volume. Right now, the ES is trading 1 million and 0.02, and this is trading 691,000 contracts. It's about half, a little better than half. So what I need to do, I guess, is figure the dots, change those to about half, I guess. Volume dots. I don't know how to do this stuff. I don't mess with this. Once I get this set up the way I like it, I don't monkey with it. I think you got to do it in the other thing. Heat map settings or something it's called. So volume dots. There you go. That's not where you change them though. Heat map settings, is that what it is? Volume dots. Okay. Minimum displayed volume is 75 and 1, so about half of that. Huh? I'll make this 50. Make it 50, I guess, or 40. And see what the hell happened. That's about half of the volume on the other. Oh, look at here. We got a VPOC migration down, but it's the full session. It's not the current session yet. Mm-hmm. My breakfast is calling me. Sorry. Well, now what? So they're chopping around, inching their way back up here. It's important to point out that the VPOC is way up here at 5208. This is not the RTH VPOC. This is the full session VPOC. So 5208 is the right there. That's the current VPOC. Way in the corner patch. Now, that's at 5811. Okay. They've got to get 500 more contracts traded off right here, or 300 more contracts traded off here. And the VPOC migration, this RTH session VPOC migration will migrate lower. And that would be significant to watch. But this is not a VPOC migration, so it doesn't have anything to do with the that's particular statistic. It helps for sure, because this says that this is the highest traded price since 1700 last night. Okay, more contracts have traded at 51.79 half than anywhere else since 1700 last night. Up at whatever I said it was, 5208, is the RTH high. So 5,000 and something have traded up there. It isn't a big deal. I mean, a big difference is 2,500 contracts, or basically 2,000 contracts difference, but that's how it works. Then it's just migrated lower, according to IRT. You can see that this yellow line is developing VPOC. It's migrated down here, and the red line is the current VPOC. So according to IRT, it has migrated. Now, Bookmap is still behind the curve. With regard to this particular contract, I'm not talking about the MES. I'm talking about the, yes, I am talking about the MES, not the ES. Okay, so what have we got happening now? We're in the IRT. I'm sorry. You see where IRT has the MVPOC, the current VPOC, Jesus, or the RTH period. Bookmap has not migrated lower yet. And that's what I don't know why. It is at 57.25 here, 58.11 over there. So it's about 100 contracts off on Bookmap compared to IRT. Okay. So what's that mean? Means it's time for a sandwich. It's going to get down here. 23.90. 27. Yeah, crazy. I don't know. So I'm putting this flag over here because there was a number in place. Now I can go stick to the original idea and then put it back here. There was something in my way there. That 70 number was in the way, that level. And these are all by BPOC migration. I don't know. Got basically 50 contracts to trade to migrate the book map down. About 45 minutes here, I go get 30 minutes. I go get my wife. School run. One of two. This is a real tight consolidation right here, as far as I'm concerned. That's retail soup right there. Now, the fact that they don't sell off from that because they've tested the VPOC, I don't know. And that's a VPOC migration. That's typically a trade that would be taken, except we haven't gotten the full VPOC migration down yet. That's the interesting part. And I don't know who to believe here. Be honest about it. Well, there's no numbers at 12. I was thinking that's what they were thinking about. Here we go. All right, there we got it. Now, what do we do? Sell it mechanically? Maybe not. NQ's not helping. We have the VWAP and the mid just above. Oh, man. Again, I wasn't on the window and it didn't take the trade. Son of a bitch. Excuse my French, but, you know, that's real irritating. I hit my entry right there and it didn't. If I don't have this window focused, I miss the keyboard doesn't work. I don't know about the mouse because I don't initiate trades with it. And so I really don't know what its behavior is. I suppose that it would be okay because when you clicked in that area, the mouse would provide the focus and then the trade, I guess. I don't know. That's disappointing. There's the scale. And then some. Ah, shoot. Oh, well. Enjoy trading. I've got to get a stream deck because the reason my mouse is moving all over the place doing other things here rather than being focused on the trading window is I'm, muting the stream. If I'm going to cough or something, I'm switching screens back and forth. I need a stream deck that I can just, here we go again with another VPOC migration. And we're at the IB low again. So that will be a VPOC migration. And here's our our risk neutral scale is down below us here at 76. And I'm going to be extra cautious and get down below entry for a scratch and not take any caution and not take any 302.58. And there's our risk neutral scale. And we're already at break even. So, when was that? That was 302, 303. 302. I would guess that's going to get taken out, but you never know. Got to our risk neutral scale, which is Jim Dandy. I had already proactively brought it up to entry. Looks like we're going to get out here. And I'm not moving it back. As many times as they take me out to the tick and go the other way, I'd like once in a while to just have it work my way. You know, just have some dork come in here and go, here, I think we're going to take this to China. Going to China, baby. Now, the next thing I have to think about is targets. Okay, I'm going to bring this target up just above the developing value area low. Right here. And call that a good target. A good target, assuming that we get down there. And who knows? Well, there's no excess on the bottom of this, really. So it's quite possible that they could get a run going. Oh, look at there, almost to my level. And what do we do here? Well, we'll trade it up to this notch right here. Other than it come back in my face, which is just irritating, but I'll measure. Well, this is the kind of trade that could keep going for donkey's years, and who knows, you know. What's that? Dan Q isn't helping us out a lot. I don't think we got one more bust here, and we're going to be one more pop, and we're down on the target. One more, come on, one more. Shows who's your big shot. Who's the big shot? Them again, just to keep locking them in. That high volume node may bust me out here. I don't know. But I would think that naked volume point of control was going to be a good one, and maybe the previous. There we are. There's the target, and I had my original. Okay, so that's pretty special. So there you go. Trade 3, target hit at 308.28. All right, well, here we go. That's kind of nice. Now you see? Oh, yeah. Okay, if I'd have just been trading the mini, like I had been, and had this morning, I would be up phenomenally and clear out of the hole and not having any worries about this at all. But I feel good about my decision to be conservative. And here we go for more lows, but that's okay. I'm not gonna chase here. So let me see here what we would have. Just all right. It's $113, right? That would be $1,137. Yeah. Had that been the minis. That's how it works, you see. But Friday, and then I think one other day I took 2 stops or 3, and that both trades went my way. So I don't know whether it's the relaxed attitude of the pressure, the money pressure. I can't imagine any more pressure because I was up against a blowout. But yeah. That's what is it? I don't know. And maybe this thing will keep going to Jones's house. Who knows what it is? But I'm not going to get in there now. Now here we have a stop divergence, 147 up at settlement and previous close, then 3. Well, that would indicate that we would have some lower ground. However, well, it's just exactly 3 points from 6 to the obstacle. But I'm not going to do that. And I should have, you see. There you have it. Boom. So there's the trade right to the obstacle. And that would have been, I would be scaled risk neutral now. I think I took a snap of that, didn't I? Yeah. Okay. I put narration notes and arrows and crap on these snaps I take, and they go in my journalytics journal. Capture of the IRT at the time of entry, and then the book map, which shows all of the. Here, if this works. Yeah, shows all of the. This snap shows the entry, the condition of the market, the entry, everything going about it, the first scale, the stop movements, the trailing stop, moving the T2 to above this developing value area low target. And then after the fact that I was a dunce and should have left it where it was. Then this will have a narration typed at the top, and that all goes in my journalytics journal, which is an online thing by Jigsaw, because I have been a Jigsaw trading tools owner for a long time. I think 2015 maybe. And it's the best dome around that I know of. Faster than Stink. Real good, real well programmed, well built. But my problem is I'm dyslexic, and looking at a dome is tough for me. And Jigsaw just never could get the heat map to work. Now, maybe the later upgrades that I haven't looked for a year, maybe the later upgrades would replace the book map. In which case, I would, that would save myself a couple $100 a month, because Jigsaw cost me nothing. I bought it outright, live license 10 years ago or something. So, that would be nice, but it just doesn't work, or didn't in comparison. And interestingly enough, that Axia outfit that's been holding webinars and crap with Bookmap here, they were a Jigsaw house and still are. If you look at the webinars, the trading domes that the domes in front of the guys are all Jigsaw. They were a Jigsaw house for a long time, and now they're pimping Bookmap. So I'm not sure what that's about. Oh, here we go, baby. NQ's leading the way. break out. Oh, go, break out. And it could go crazy. We have a micro composite low down here. I think I put the damn thing in there. Yeah. There's the micro composite low that was set Friday. So not too far down there to that. Basically 10 handles, 10 points. And it might just keep running. For why, I wouldn't have an idea. I mean, other than there's no news out. It's 11:30. News has been out for 2 hours. The latest news, the actual numbers were out at 7:30, and then we had a talking Fed at 9. Now zippity doo-dah until 1300. But it's definitely in sell-off mode now. Which, had I just stayed on my short, well, that'll be an interesting look back at what happened. Let's see how we can do this. Well, here was our first short. Our second short, and ironically, just a little bit below it, the third short, which is running. Now, had I shorted here the first time, not scaled up, or here, I guess, and not scaled up and just kept running them, would have been a nail biter right here. But only one trade and way down there. Now here was the second entry, or the third entry, the scale, and the adjusted target 2. And we're down another 8 points below that. So, once I get in the money like these and I get wiggled out of this corner, the thing is going to be to maximize my trades. Like, just keep trade management on with the trailing process, but keep the second stop going way out in front, second target way out in front, when I suspect that there's a big move like this. Which, again, I reiterate, RMT, rear view mirror trading. Everybody's a star. Everybody's great. Everybody knows all the answers. Everybody knows the theory. My 16-year-old daughter, who has no use for trading, but is a gamer, so she's real computer savvy, she can come in and do the same crap. Anybody can. These gurus and guys on the internet and guys that don't trade live in front of your face or narrate live in front of your face are, in my opinion, suspect of bullshit, because anybody can narrate these things looking at historical data. That's just a fact. That's a real factor-rooney. So I'm going to go get some water now because I'm talking too much. they continue to push lower. Well, till I said that. Yeah. If you're interested, this is the MES. This is the micro composite. And here we have the micro composite low, which is, and here's today's trade. So that's where we are. This is the Renko, straight down. This is still the ES market profile, because it's, and we're having big delays here. I don't know what's wrong. This computer doesn't seem to want to think very good, and it's the fastest, biggest thing I could come up with. I'm about ready to throw my toys out of the cot, actually. This is an i9 12900K with 64 gigs of DDR5 RAM, an RTX, NVIDIA RTX, a GeForce RTX graphics card, and I'm not sure, 3090, I think. It's not one of the latest, hottest, greatest, 12 gig memory. There's no other software on this machine, unless some ass is mining crypto that I don't know about. And it seems to struggle. IBRT seems to have continual lags when I want to move a chart, which just strikes me as weird, really weird. I don't quite understand that. I may take a video of it and, yeah, whatever. So, yeah, that's that. So here we are back at the ranch here now. There was our sell-off, our last target, and we got 10 more points below that target. So that will give you an especially good example of why I think a better approach is to bring your stops down as the market is moving in your favor and trade manage with a stop. So I could have trailed out here at this latest consolidation, dropped it down here again, and I would be, considerably ahead point-wise, tick-wise on that trade. I'm not complaining about the trade, but, it's a... it's about a 13-point trade overall. I mean, total distance. So, but it would have been 23 something. So, yeah, maximizing the winners. I mean, this sounds so cliche and trite, but it really is true. Let your winners run and cut your losers short. Maximize. I've discovered by this little exercise that I'm involved in now with the account and saving the account from a ruin because of stops. You've got to have a risk reward ratio greater than 1.5. It's got to be at least 2 to 1 or better, because that compensates your wins then start to overshadow greatly your losses. And that allows you to continually grow the account, as opposed to getting, 2, 3 stops and I'm up against blowing the account up because there ain't enough room for another stop. And this is a express funded account with 50,000 express funded account with TopStep. Just gotten off to a start, and it was up, a couple $300-400 or one trade, I think. And so the 3 stops didn't wipe it out, but was in $170 or something of the drawdown. Well, that's not. It is one more stop on one lot, but my trade plan is 2 lot risk neutral, as I And I'm trying to keep all the plan pieces in place, right? So that's where that's at. And it's looks like it's going to keep dropping. So where? Where the hell is this thing going? Oh, well, we've got value area low and previous RTH low right down here at the MC low. So 150 is probably a real target. There. These are good targets right there. And there's got to be a buttload of stop down there. So expect a stop pick and some stop travel further south would be my guess. Now, if you want to look at the micro composite, here is our micro composite low from Friday. This was the micro composite low previously. So that stop run was good for whatever these are. I can't see. It's 167.75. I'm sorry. Whatever this is. Yeah, about 167. Down to 150. That right? Doesn't sound right. I can't read that damn little red thing there. Now it's going to have all kinds of trouble figuring out where it is. I don't know what's wrong with IRT, but this really sucks. Or this computer sucks or something. 157.75, correct. Okay, and it's down at 160, 150. So it dropped 7 handles on that stop pick. Last Friday. Last Friday. And we're, looking at that again here. But you don't ever know when. They could get it down here. People get all excited. Buyers come in to defend it. Value area low and that previous RTH low, and then up she goes again and around the mulberry bush. The place to be in is from up here where I was in. Instead of letting it take the target, keep pulling the target down and keep trailing. That's the proper risk management for that trade, which I didn't do. Which I didn't do. I'm not complaining, but spilt milk, woulda, shoulda, coulda, RMT, baby, all those skills. All those skills come into play. Yeah.
Well, bummer. Had I I shut the stream down here because I have a school run in a few minutes. Then when I get back, just a short period of time before a meeting, followed in hot pursuit by another school run. So I can't foresee myself taking any trades, and this is a real good way not to do something stupid. So speak to you tomorrow.